Per usual, loading on the channel is for educational purposes only and is not intended as financial advice. Let's talk about alts today. It's Wednesday. Let's talk about some fundamentals for alts, proof of work coins, why that's important. But first things first, there was a Fed meeting today. The Fed decided to hold rates where they were. The Fed remains extremely hawkish, especially going forward. They expect to raise rates again a couple more times, apparently, in the near future. That's certainly going to hurt liquidity into risk assets. There are ways to measure that, which we'll talk about. But all that is to say, there will be a continued headwind for altcoins broadly. Doesn't mean they can't do well. It just means that they are very, 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 very unlikely to do well. One way we can look at where retail money has been going is look at retail money market funds specifically. And because you get a yield on your cash and because yields continue to rise, the retail money market fund portion is at an all-time high. Money markets in total are at an all-time high at around 6 trillion. And if you're looking for dry powder, if you're looking for an alt season, it's right here, right? This is where all the money is as far as where the flow is going to come from. You know, I get this question, do you think retail's ever going to come back? I got that question in 2016, in 2018. People will be back. They will always be back. But you have to be realistic and not rely on hopium, especially in times like this when there isn't a reason to come back, you know? Especially if legacy markets start to crumble here. Cash is cozy, comfy, and safe in the moment. And that's more likely where dollars tend to flow. And if we look at rates on the top versus altcoin market cap, minus Tether, minus USDC, and minus wrapped BTC, it's no surprise that we're still kind of floundering here across the board. Most alts look like this, where they are either at not all-time lows, but they're at multi-month, multi-year lows, some of them at all-time lows, some of them not quite retracing to their 2020 baseline, but on their way. And the question I think everybody needs to ask themselves is, if I'm sitting in an altcoin, how sure am I here that these levels are going to hold, or am I going to just sit through another 50% drawdown, potentially, for some of these coins, right? Everything's different, but the broad market conditions are not favorable for altcoins to do well. I mean, that's just the fact of the matter. We can look at US liquidity. This is a liquidity index, if you will. You can see how post-COVID, post-stimmies and PPP loans, that the liquidity in the United States exploded. Now, even though the Fed is doing QT, they're reducing their balance sheet. They're not adding to it. We're also seeing money come out of reverse repo, which is helping push liquidity higher if you're under the assumption that the money in reverse repo is inert money. But where is it going? It's going into treasuries. It's not going into risk assets, right? And I think everybody's looking at reverse repo, hoping that money continues to come out of reverse repo instead of risk markets. But if we drain reverse repo completely and we still need to fund debt obligations, or there's still yield, et cetera, money is more likely to come out of risk markets. And if we superimpose that idea onto the Bitcoin halving, historic Bitcoin halvings, if we look at junk bond yield as a way to measure risk appetite, basically, there are some schools of thought that say, you know what, the halving doesn't matter at all. We've just gotten super lucky, just super coincidental that the halving has coincided with the 4-year business cycle. And wouldn't you know it, we're on our way to another potential cyclical rotation in 2024, 2025, thereabouts, right? I don't know if I'm fully on board with that school of thought, but it's important to just know that as a data point, especially for altcoins, which liquidity matters much more than for Bitcoin. But if Bitcoin isn't doing well price-wise, again, unlikely for alts to do well. We can look at this again. The altcoin speculation index. This is a percentage of altcoins with 90-day returns greater than BTC. Almost at 50%, which to me is surprising. So I don't know what exactly is in this calculation that Charles Edwards puts together. But it is pretty surprising to me that many alts are actually doing better than BTC on a 90-day average or whatever, right, return. It would be interesting to superimpose those junk bond yields with altcoin returns and see if there's a correlation there. I am almost certain there would be. Before I talk about some altcoin fundamentals here going forward, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience, a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. And, at the very least, I would go down the long list for yourself and ask yourself just some basic questions. Where are my levels that I'm watching? What coins am I just holding to zero, basically? And what coins should I cut my losses on, right? Charts that look like this for Link, I think this is worth continuing to watch. Charts that look like AVAX, for example. I know AVAX is my new Zcash. This puppy does not look good. It looks sick. It's sub 10 now. And this is going to vary for everybody, right? Are you staking? Are you doing something else with it? Sol's another one that a lot of people have a lot of attention, generally kind of a mess. So, you do that for you. One of the things to pay attention to, though, is the bedrock, the foundation for some of these coins. Now, if they're not proof of work coins, they basically get a free pass because they are using the security of the Ethereum network, or they're using proof of stake. They don't have an external check that they need, at the very least, hash rate to have security. They need a security budget, which means they need fees or they need emissions, a subsidy to keep that going. And they also need mining pools that are not at risk of 51% attack. And you'll notice historically, the number of proof of work coins that have launched over the years basically has trended to zero because it's very hard to actually keep a proof of work network going in a bear market. No one wants to mine it because there's no money in it. And you're just paying for energy for no reason, right? You don't get an ROI on the ASICs or the GPUs, and it's just game over. I don't have the hash rate for Grin, but Grin was one. Ravencoin was another. So the gold standard here, obviously, Bitcoin, look at the hash rate. Tell me where the bear markets were. In price, not too easy to see. Now you can see 2018 when hash rate dropped, miners became unprofitable. This was the China mining ban. But you certainly can't see the current bear market in price. This is continuing to make miners more and more efficient, survival of the fittest, or just price agnostic, right? Hash rate should get more volatile over time if external factors are adjusting whether or not miners turn on or off hash rate at an industrial level. But anyway, this is Bitcoin, right? And its hash rate's at an all-time high right now. And you'd really never know it if you're just looking at price. There's also, I'll skip ahead here too, transaction counts for Bitcoin, also basically at an all-time high. Daily active addresses on their way to an all-time high. I don't hear anybody talking about that per se. Fees this time around slowly creeping up in a bear market. They're not spiking like they were in May, but they're on their way back up. And if we look at the mempool, the unconfirmed transaction count, that's also filling up and continues to stay full. The more you pay for your transaction, the higher the priority, the more likely it is to get confirmed. And all these blue slivers here are basically transactions with very low fees. And if we look at where this is probably coming from, it's probably coming from ordinals, which love it, hate it, doesn't really matter. It exists and there's nothing you can do about it. I don't love it, but I can't do anything about it, right? It doesn't matter. It's good in a sense that it's actually bringing activity and fees to the network. Now the question is long-term whether or not this will be worth it, whether the trade-offs will be worth it, well, whether this will even be enough. And if we look at the mining pool distribution, we all probably wish this was a little bit more distributed, but this is pretty good, right? We're not even close to 51% attack anywhere. 30% is a bit much for a single pool, but that's come down. And this is over the past, we can go over the past year, over the past 3 days. It's about the same. It'll change a little bit here and there, but point is, distribution on the pools point towards decentralization. So that's your gold standard for proof of work. Now, if we look at Litecoin and Doge, which are merge mined, which means they are mined together at the same time, you get the rewards for both. Their hash rate's actually doing okay as well. It continues to rise. And if it weren't for Charlie Lee in 2014, who proposed this, Litecoin might not be here today. Doge might actually not even be here today. Doge might have not survived in the early days long enough to make it to 2020, right? And if we look at where the revenues are coming from, LTC in the red, Doge in the green, previously it was all Litecoin, right? Litecoin was where the revenue was coming from. And after 2020. Now most of the revenue is actually coming from Doge, which is pretty ironic. And you can see the Litecoin halving here where the revenue dropped basically in half. But if you're a proof of work coin without a security budget, the whole thing just falls apart, right? You don't have a stable footing, you don't have a stable foundation. So this is where prices become important, because if revenue here drops to, let's say 2020 levels or less, let's say the revenue drops to, total revenue drops to somewhere in 2017, is that going to be enough to keep miners mining? Is that going to be enough to keep the network secure? I'm not trying to be a doomer here, but if you're holding this stuff, you need to game it out, because if things start to get ugly for certain proof of work coins, you may see some downward spiral with hash rate, difficulty, chain security, price, exchanges getting angry and delisting things, right? It's not a good place. So just keep that in mind. Nobody wants this to happen, but it's a possibility. If rates are what they are for the next 6 months, things may get increasingly interesting, and especially if energy goes up, right? If the ROI on mining goes down significantly and nobody's mining this stuff, then you're in trouble. Now, Monero, on the other hand, they've done a few things over the years. They've changed the algorithm a few times. They've tweaked it, and then they changed it in a big way. I think it's like Crypto Night or something. I forget the exact algorithm, but more focused on CPUs than even GPUs or ASICs. It was never an ASIC chain to begin with. This is one out for things like script miners potentially down the road, but this risks a different type of chain centralization, because then you have to get everybody on the same page, mining with the upgraded algorithm, the different change in the network, and that has its own issues as well. There's always trade-offs. This is script miners at 4 cents per kilowatt hour, but which is where the industrial miners mine, really. But if we bump that up to, let's say, 12 cents per kilowatt hour, and we just focus on script miners, most of these aren't profitable anymore, right? So things could get interesting. Now, additionally, Monero has tail emissions, which means it will always have a block reward subsidy forever in perpetuity. It's different than Bitcoin in that sense. And you can see the coin issuance in green here versus the miner revenue in red. There will always be some revenue, hopefully enough to support the security budget for Monero. So I don't think Monero's at risk from that perspective. Monero's biggest risks are regulatory risks, because it's a privacy coin, and supply risk, because you can't actually audit the chain. You don't know how much Monero actually exists realistically. Again, there are trade-offs, right? You've got privacy here, but you can't audit the supply. So you got to take it where you can. Now, if we talk about pools, this is where the Zcash conversation starts, because if we look at LTC, this is the LTC split for the mining pools. Looks fine. No 51% attack risk. Looks like there's 5 dominant mining pools here with a ton of little tiny mining pools, right? No big deal. Looks okay. If we look at ETC, Ethereum Classic, is at risk of one pool being dominated or dominating the network, 51% attack, that sort of thing. There are a ton of small pools, but it is getting closer to being at risk. If we look at ETH PoW, ETH proof of work, which nobody cares about anymore, I'm sure. Virtually nobody's mining this thing, but this is split nicely as far as the decentralization piece. But the problem with ETH proof of work is the hash rate, right? Hash rate is extremely low relative to where it has been historically. And the security budget is, who knows what, I don't even know what ETH proof of work is even priced at, because I don't know where you'd even trade that, but looks like it's at $1.29. So that's at the extreme end of the spectrum, where hash rate basically, it's not at 0, but it's down like 99%, right? And then you've got Zcash, which recently the alarm bells were ringing for one pool sort of taking over, right? Now, as prices fall, you tend to see miners just stop mining a certain chain. And over time, for things like Zcash, that's continued to happen. Now, miners can switch pools to another pool. Maybe another pool can change the incentives. Maybe via BTC can recognize the issue here and correct it. Or maybe they don't even bother and nothing happens. But that risk is there now. There is a 51% attack risk. There's a double spend risk. There's a chain security risk. I would care about it, but I don't know if Zcash holders necessarily care about something like that, right? And this isn't just a pipe dream for coins as far as a 51% attack risk. Back in 2020, ETH Classic was hit with 3 51% attacks in a month. And ironically, price didn't change too much, but you run into all sorts of issues on the exchange side, because what the exchanges will do is change the confirmations. This is Coinbase's announcement that they are protecting users and increasing deposit time from 40 minutes to 2.5 hours, right? And the whole thing just breaks down, right? It's like, what's the point? Just leave the coins on the exchange, you know? And now we're not talking about decentralized cryptocurrencies. We're talking about trading sardines, where this thing that have a value that aren't necessarily being used as intended. You know, they're just traded, and that's that. This is Kraken's breakdown. And unsurprisingly, you can see coins with the biggest issues historically have extremely high confirmation times, right? Because the exchanges don't want to get burned on this. They don't want to be at risk for a replay attack or a double spend. Replay attack is something different. But for me, if I'm caring about anything, I'm looking at this at a bare minimum, right? So proof of work alts, especially in a bear market, especially in an extended bear market, are extremely vulnerable to the basic fundamentals breaking down from a security perspective. So I would just keep that in mind. And we can quantify this by looking at the cost of 51% attack, let's say for an hour, right? You can see Bitcoin, it's pretty expensive, especially compared to everything else. And the question after 51% attack is like, okay, what do we do? You know, do we change the algorithm, which is what ETC talked about? I don't know if they actually went through with that. And it just generally becomes a giant mess. So definitely something to watch out for from alts that aren't proof of stake. You know, that's a benefit of proof of stake. There's really nothing at stake from the real world perspective, because you're just holding the coins and hoping nothing goes bad. All right, let's talk about stablecoins real quick. Still nothing changing there on the stablecoin front. If anything, this has slightly ticked down a little bit on USDC and USDT. And again, rates and regulation, the most important thing here for stables in the United States. Bitcoin dominance continues to rise. Unsurprising, we've got an ETF coming eventually, sooner rather than later. And if some of these proof of work coins go by the wayside because of security issues, that'll be even more interesting. There'll be less competition on the proof of work front relative to Bitcoin. As far as ETH is concerned, this is actually at, 16, 15, 16, 20 thereabouts, but not much has changed week over week here. My outlook hasn't changed. It's still on the edge of failing this ascending triangle, likely on its way to fulfill its destiny lower. Again, there's headwinds. There's headwinds everywhere. Volume here on the index continues to just dwindle. And this just doesn't look like a coin, unfortunately, regardless of fundamentals, that wants to go up right now. So if we do drift lower, I like an eventual move towards 1100, 11 to 1300, let's say. I think 1200 would be the midline there, midpoint. On long-term log regression, there's also support at 1000, and then below that it gets considerably uglier, right? 3-digit numbers that we shouldn't speak of out loud. ETH-BTC made a new low today, a new multi-month low. I think it was a new yearly low, actually. This curved squiggle, maybe it's a falling wedge, maybe it just falls off the table, but this is going from increasingly neutral to increasingly bearish, especially if it breaks out below the cloud, below this channel, and ultimately if it breaks this pivot, then you know things are really, really about to get interesting, which it looks like somewhere around 052 or something like that. ETH just can't seem to get a break against Bitcoin. And then quickly just going over some of these layer ones that I talked about. ETC looks uninteresting until 25 on the USD side. ETC, BTC just looks like continued bearishness, right? It looks like this in 2020, where it just bleeds. 2018 to 2020. I'm not so much a Bitcoin maxi as I'm trying to talk people out of losing money on dumb stuff like this, right? Even if we're just looking at price and not taking fundamentals into account, why would you bother holding some of this stuff like ETC? Monero actually looks decently okay on both the USD and the BTC pair. It doesn't look like a long entry just yet for me, but maybe above 175 looks okay. And on the BTC pair, I would just watch this diagonal on the inverted head and shoulders possibility. Looks very real to me as a setup at the very least. LTC, again, if LTC breaks down, if Doge breaks down, which Doge certainly should, you know, if exchanges start to delist Doge for security reasons, then the whole game gets super interesting, right? Personally, I didn't think Doge ever had a fundamental value, but maybe Elon will take it over. In any event, LTC is sitting on a interesting support here, and things could get very ugly from the mining perspective. LTC BTC also just looks very bearish, unsurprisingly. Zcash also very bearish. Maybe this is the TKC clamp, maybe it's oversold. At some point, people start to look at some of this stuff and say, well, it's been down only for 2 years. Maybe I'll take a punt here and see what happens, right? And if enough people say, you know what, by Jove, that man is right, and all of a sudden this thing can move, basically 100% in a week, only to resume down only for the next 2 years, right? Something like that. So if you're really good at timing stuff like this, sure. But again, if you start to see headlines that there's a 51% attack risk, exchanges get nervous, people get nervous, maybe it doesn't matter, I don't know, but not something I would want to be sitting in or betting on in the near term. Doge also just, there's no bullishness here for me. It needs to make higher highs first, otherwise lower lows, very likely. Ultimately, I like 100 sats or less for Doge BTC. So I'll stop here today for the alts, but I have been doing weekly streams, 2 p.m. EST on this very YouTube channel. We talk about anything anybody wants to talk about, including all the random alts. So you can join me there tomorrow, the 21st, should you be interested, or catch it on the recording. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.